three key indices on Wall Street closed with losses on Tuesday. It means that the correction is in progress in the market despite yesterday's inflation data. The US CPI logged a downtick in August. What's more, inflation slipped more than expected. Does the fresh CPI provide any support to US stocks? We will see that soon. And now let's discuss what's going on in detail. Despite the fresh evidence of a slowdown in inflation, investors are stoking fears, so a new bearish move could follow. Yesterday, the S&P 500 nearly touched the key level. Once it is broken downwards, large investors and firms may trigger buying pressure on Wall Street. The S&P 500 has to decline another 0.5% to reach this level. Meanwhile, it is trading at about 4,443 points. Analysts predict a tight range for the index between 4,400 and 4,470. Later on, large investment funds may enter the market with new long positions. The US inflation data was anticipated as a catalyst for a further direction of the US currency. However, the US dollar remains almost unchanged, defying expectations. Its index is now trading at near 92.60. It's likely to trade sideways between 92.30 and 92.90 until the Fed's policy meeting next week. The odds are that the regulator will announce tapering its stimulus sooner than later. This rhetoric is certainly bullish for the US dollar. The dollar versus Canadian dollar pair is ready for a further climb despite growing oil prices. Besides, in case of the greenback's broad-based strength, the currency pair might rise at a fast pace. Meanwhile, the dollar versus Canadian dollar pair is trading at near 1.2700. The expected borders of the corridor are seen at 1.2620 and 1.2720. The currency pair is likely to dip for a short while, but it will hardly break support, so the price is set to rebound to the predicted range. Apparently, the crypto market has got the second wind. Since yesterday, Bitcoin has been growing slowly but surely. Its price now stands at $47,500. Analysts point out that the most popular cryptocurrency has been able to break the crucial overbought level of $46,500, and now the door is open to a new target, $49,000 per token. The US inflation data is still the hot topic among market participants. According to the Wall Street Journal, a spike in inflation eroded real income of the low-paid Americans by 0.5% in annual terms. Another thing is that real income of households sank 2 to 3% last year due to high inflation. It is commonly held that a spike in inflation recorded in April until recently is the key criterion for the Federal Reserve for policy decisions. A slowdown in inflation is positive for the stock market, though the central bank has to scale back monetary stimulus. In fact, the regulator has no other instrument to tame inflation besides tightening monetary policy. Perhaps we will hear about this in a week on September 22nd. And that's all for today. Thank you for watching and stay tuned.